Tax advantage investments. You've had a great year. High income, a thriving business, a smart real estate investment, or a timely stock cash out. And now the tax bill looms. At HW Tax Strategies, we don't just accept the tax bill. We engineer plans to deploy capital into tax advantage investments that create offsets for what you've already earned. Today, I'll show how qualified opportunity funds, oil and gas, renewables, and film credit productions turn pay the IRS into keep the assets and lower the bill. This is your guide to right-sizing relief. Let's make the code work for you. Hi, I'm Dan Blair, CEO and founder of HW Tax Strategies. Now, most people see the tax code as a weapon aimed right at them. But flip through those 70,000 pages and you'll find rules crafted decades ago to spur growth. Qualified opportunity zones were created in 2017. Oil and gas incentives from the mid-20th century. Renewables from recent green pushes, even film rebates to boost creative economies. The past on your return is locked in. Earnings, gains, all reported. But here's the power move. You have two paths: pay the IRS outright or deploy that cash into incentivized investments that generate credits and deductions against what's already happened. Suddenly, you're not losing money paying the IRS. You're building an asset on your balance sheet that grows while shrinking your tax bill. Starting with qualified opportunity zones from 2017, Congress aimed to encourage investors with large unrealized capital gains to sell and channel that money into economically needy areas or distressed areas. They built in a simple yet powerful rule: realize the gain, then redeploy the funds into a QOZ within 180 days. And you defer the taxes due while earning tax-free growth on the new investment. These qualified opportunity funds often focus on real estate in underserved spots, but they also open up the doors to small businesses and oil and gas for broader diversification. They're especially effective if you've already sold and the capital gains tax is bearing down on you. Keep your original investment's cost basis intact, deploy just the gain to a QOZ or any part of the gain to a QOZ, and watch the deferral kick in. Now take oil and gas, a classic example with roots in the code's earlier days. Intangible drilling costs let you deduct 90% or more upfront through what's called intangible drilling costs in 1 year, plus 15% depletion on production income. It's immediate relief for high income earners facing AMT or income spikes, cushioning volatility while your stake in energy infrastructure appreciates. Rather than handing over taxes on a $500,000 income surge, you're drilling into offsets that keep your capital in play as opposed to the IRS's pocket. Renewables. Renewables, they bring a new modern edge, especially storage for the data center explosions. Even with the one big beautiful bill trimming solar and wind, batteries hold strong 30 to 70% investment tax credits that were spared with the tax cuts. Lead with 100% bonus depreciation to zero current taxes. Then retroactively claim the credits for up to 3 prior years, clawing back overpayments for real cash flow. For business owners with AGI overhang, it's reclamation and reinvestment in green infrastructure that powers AI, blending sustainability investments with tax benefits in the form of accelerated depreciation and tax credits. Film production rounds out as a creative wildcard. Film production has been a tax credit opportunity for many years. Instead of paying the IRS, why not purchase assets that are already needed for a specific film production? You will receive a pass-through depreciation capture and a tax credit similar to the credits from renewable energy storage. Sequence depreciation to wipe out current liability, and then look back for prior year refunds using the tax credits. It's a low correlation hedge for exit sellers with one-time gains, now turning production costs into upfront savings with potential residuals and capital return in a $50 billion industry. The tax code's vast landscape holds allies and adversaries. Savvy redeployment of your capital can turn your tax burdens into wealth building. Thanks for joining the conversation. And if this shifted your view on tax incentivized investments, download the full ebook at hwtaxstrategies.com for the complete playbook, or ring 303-777-7124. Our team right sizes your investments. We reduce, defer, mitigate, and sometimes eliminate taxes altogether from a taxable event. Together, we'll make every dollar count. The horizon's not just open, it's limitless.